Right guys, welcome to episode number 18. I know it's been a bit of a wait of the FVT Trading Bootcamp. Now, in today's one, we're putting everything together, and I thought what I'd do is I'd go to my YouTube comments. Some I've already answered, some I haven't, but we're going to be doing maybe 20, 30 minutes of me answering your questions from YouTube. So let's get straight into it. If you haven't already, join the free Discord. The link to that will be in the description below. I have a free A+ checklist there, and we've got 2 days left. Let's roll. So on the community tab here, just having a look at the question. So I don't mind this one, right? I do not mind this question right here. I think this is a really good question. So thanks for the content. First time I passed. Congratulations if you're watching this video. You've got it. Now, a lot of people ask this question here, which is about dealing ranges. You know, trying to get people's head around dealing ranges, 15-minute fair value gaps. And I want to cover this, right? I think this is a really good question. So maybe this will simplify things. If you've got a market like this, right, that's moving like this, the dealing range that becomes important is only relevant to if you're looking for longs or shorts. Now you might say, well, how am I looking for longs and shorts? How do I know if I'm looking for longs? Well, are we sitting in a fair value gap? It's as simple as that. If the market is not sitting in a fair value gap, then don't do anything. If we're sitting in a bullish gap, look for longs, then make sure you've got a target and then draw the dealing range. So for example, if price is sitting right here, we can look for longs. And then the dealing range I draw is the previous leg in price that printed that fair value gap, right? So I draw something like this. So I do something like that. Now, dealing ranges is a tricky topic. So you're gonna have to do a lot of practice on dealing ranges. It's gonna have to be a lot of practice. And even if you look at, you know, at current price, right? So have a look at current price. Look what price has done. If we go here, even in the Asian session to have a look at what price has done, let's go to start to the 15-minute chart. And you can see, right, what does price do here? We find support at a fair value gap, right? That's an important area. And then the dealing range that's important is the leg, right? You can do this leg, but it's a leg in price previous. And you can see how price bounces from OTE. Now, you're not always going to bounce from the fair value gap. There might be multiple fair value gaps, which is the second part of the question. You know, how do you take a trade if you're stuck between two fair value gaps in the 15-minute? Well, my advice then is to look at what the market has been doing for the last couple of hours. So if the market has been stepping down for a couple of hours and we tap into a bullish gap, look for a long. If there's a bearish gap here, well, you should have taken a long. If you haven't taken the long, you can scalp a short, but it's not as probable. So the same thing will happen here, right? The market goes down for hours, it taps into this gap. We push higher impulsively, we've got the power of 3. There is a 15-minute fair value gap here, and you can see that, yes, you could scalp off that. You could take a scalp to the downside, but the power of 3 and a higher time frames already been initiated. So shorts are not as probable and longs are more favorable. If you're more talking about how there's multiple fair value gaps in a leg, this is a good question too. So you've got a fair value gap here and then a fair value gap there. Well, there's different ways to do it, right? Some people just wait, they draw a range like that and they wait for price to be below the 0.5 level. And then they only look for trades when it's below 0.5. For me personally, I'll take a trade if it reacts nicely from here. And I'll also take a trade if it reacts nicely from here. And if one of those loses, who cares? It's just probability. So hopefully that answers your question. It's a really good question. You know, dealing ranges, practice them. Being stuck between two fair value gaps, I hope that answers your question. So really important. This one here, what time does the Asian session macro start? Well, the first macro is from 6:50 to 7:10, right? So this is the first macro of the day, and the last macro is 3:50 to 4:10. So it goes every single hour. There'll be a macro. Really important. Study that. Let's keep going. Let's keep going. So I'm just going through here now. Cool. Now some of these will be questions. Some of these will be thoughts. And if you make a feature, it's all good. I appreciate the comments. I appreciate the support, and keep leaving comments on these videos because you never know. I'll do another one like this. If you like these videos, guys, let me know in the comments below. I'm happy to do another one as well. This is yes, right? Macros work, and I've had this question. I reckon it's probably the most common question I've had. I reckon at least 100 times, right? They work all the time. It's just a timing element. So they work on Forex, on futures, on gold, on Bitcoin, on crypto, whatever you want to trade. They work. You just got to study it. That's really important. It's good to hear you're ready. All right, how do you collect more data? It's a really good question. Now, I've made a little video on this. I'm going to make this just a 1-minute answer. The way to collect data is you collect screenshots. Number 1. Number 2, you have to analyze those screenshots. What does that look like? You need to look for patterns. You need to see when price wins a lot, when price loses a lot, and you need to determine what patterns exist when you win really big and when you lose really big, because you want to avoid the big losses, but you want to increase the big wins. So when you win really big, you want to make sure you look at the market structure that is associated with that. And a lot of the time, it's higher time frame fair value gaps and higher time frame ranges, just from my own studies. So really important. The best macros, there is no best macro. I've kind of answered that a few times, so please keep that in mind. This is another one. How do you choose to place the OTE fib? And a good, I guess, thing to do is to look at the price, like chart the price out. It's not always going to respect OTE. It's just sometimes it will. And you want to find examples of when price respects OTE. So for example here, from high to low. I'm doing this in hindsight. This is where you've got to start. You've got to find at least 50 examples, guys, in hindsight. Chart out what you see that's important. Mark out liquidity sweeps, mark out inversion fair value gaps in these key areas. And then you've got to put in the reps, put in the reps. Seeing it 5 times is not enough. Seeing it 10 times, 20, 30, it's not enough. 50 times, you need to document this in hindsight. And then you need to watch the markets live and then watch to see how price reacts. Don't even trade it yet. Just watch it. That's my advice. With a 15-minute bearish fair value gap, if price is wicked into the fair value gap, is the whole fair value gap area valid or just the area below or above the previous wick? Cool. So I'm assuming what this question means is something like this. Something like this, right? So you can see here that we have a fair value gap on the bullish time frame and we have a wick. So what this person's asking is they're asking me, is the whole fair value gap valid or just the area above or below the wick? In this case, it's a bullish gap. So they're asking, am I just looking down here or am I still looking here? Well, any part. The answer to that is any part of that gap. Now, it would be better if we swept the low, but we don't have to. We don't have to sweep the low. Like say, for example, here, we tap into that 15-minute gap. We don't have to sweep that low again. We can just bounce from that gap. It's just support and resistance. That's all it is. And then say, for example, a bearish one. I'm just trying to find one with a wick so we can use that. It's been pretty bullish lately. Let me just try to find one here. Yeah, so the same thing here. So say we have a fair value gap here on the bearish side. Like that, you can see our price. We've got a volume imbalance there too. I'm including that space between the wicks. Now, if price did something like this, price could just do that and then still move lower. It doesn't just have to come into this top portion. It can do both, right? So it's just a matter of looking at that specific area. That can be a reactionary point. And then if we engage that area, you look for a trade. That's important. Everything, by the way, if you're watching this video, all these templates, all these checklists are in my free Discord. So go ahead and join that. Candlestick structure, really important. Really, really important. Let's keep going back. This is a good question. How many macros can we expect, or how many can we trade in the Asian session every week on average? And you're from my Discord, right? I'm gonna like that. It's true, it doesn't really have a silver bullet. Asian session's a very long session, and when I trade Asian session, it's one of those things, right? I look at the open of the session, which is not a macro, and then I just look for the first macro, and then I do other things in the meantime. And I don't wanna be on the charts for like 6-7 hours looking at Asian session. So I try to take a trade early. If I get an early trade, great. If I don't, it's all good, and then I move on from there. So there are macros every single hour in the Asian session. That's really, really important. All right, into some more questions now. Some of these now I've actually answered maybe with text, but what I wanted to do here is actually answer some of these things because some people think we'll get really, really good, I guess, analysis and ability to process this information if I go through them a lot of the time. So keep that in mind. This is a good question here. So how many of your losses actually hit stop loss and how many do you close manually? That's a really good question. That's a really, really good question. So risk management is a big part of trading. Like you could learn the strategy, you could know exactly what the market's doing to a degree, but your risk management could be the bad factor or the determining factor as to why you don't make money. And it could also be psychology too. If I had to put a number to it, I don't have the stats on me of that particular thing at the moment, I would probably say it's like 50%. 50% of my trades hit stop loss. However, that stop loss is probably mitigated, and 50% I'll manually close if I don't like how price is looking. So that's what I'd say, and it just depends because different market conditions will do different things for me. So that's really, really important, and I'm glad to hear most of you guys are enjoying this bootcamp. It's something I thought I'd put out for you guys. And again, it's a growth project. So to be here for years, for anyone that wants to have a look at it, it's really important. This one's a good one, right? Can you enter off a 15-minute fair value gap, no macro, no silver bullet, no kill zone, but it has other things? Yes. Now, I don't trade just macros. I trade macros and market structure. I know some people in my Discord, they trade just macros. Great, fantastic. If it limits how much you trade and that's good for you, then do it. But if you're the type of person that says, look, I want to trade a little bit more, I can manage risk, I can control my emotions, then yeah, if you have everything there but a macro, everything but a macro, then take the trade if you want to. I'll take the trade personally. I'll trade macros and I'll also trade outside of macros too. Alrighty, let's keep it going. And if you like this video, guys, give that a like. I might do one of these in the future outside of the bootcamp. Really, really important. All right, let's have a look. A lot of people ask me this too, right? And that's the truth. Like, my answer there is the truth. What is my win rate with this strategy, with this model? It ranges from 50 to 80%. It just depends. Don't get caught up on the win rate, guys. And I want to make a little note on this here too, because here's the thing. You could have a 50% win rate and be profitable. You could be 80% win rate and be unprofitable. So just keep that in mind, right? A bit of a tongue twister. Just keep that in mind. Unprofitability, being unprofitable, does not mean that you have a low win rate. That's not what it is, right? So keep that in mind. I will float typically about the 60%, 65% mark, but not all my trades are one-to-one. Some are one-to-one, some are holds, some are negative risk to reward. I've got a mix of trades, and I kind of balance it out as the market projects. So that's really important to keep in mind. It's a good question, but it's a really, really good question. So keep that in mind. Kill zones are the main sessions. So yeah, macros obviously every single hour. Silver bullet sessions for those that aren't sure. For London session, it's 2 a.m. Or sorry, I should say 3 a.m. to 4 a.m. London session, 3 to 4. For New York AM session, it's 10 to 11. And for PM session, it's 2 to 3. Right, so keep that in mind. Good questions, Bart. Premium discount, really important. It's quite good. So yeah, these are really good, guys. And I appreciate all the comments, because this allows us to do videos like this. But also, it allows you and the community to engage. And I like engaging with you guys too, so it's quite important. And this is the point too, right? This right? TJG trading, TJG. It's a bit of a tongue twister there too. Really good point. Really good point. Because at the end of the day, you're not going to be perfect as a trader. And a lot of people ask about win rate and perfection. It's not going to happen. I sometimes still take trades when I reflect, and I know that I shouldn't have probably taken with that much risk. You're not perfect. I'm not perfect. We're both human. So once you eliminate the need to be perfect, life is much, much easier, becomes much easier. And you don't have to worry too much about being wrong or right. So quite important. All right, let's have a look. Let's have a look. Yep, and Jake, important. How important is impulse? Very important, very important. Like say, for example, here, right? Look what price has done. Look at the 5-minute chart. We've come into this 5-minute fair value gap and we've had impulse out of that 5-minute gap. We go back down to a 1-minute chart. Impulse shows you what the market wants to do. It's just as simple as that. From this 5-minute gap, we have impulse out. During the macro, we have impulse out. So if you're looking for a setup, impulse is what you require, right? I talked through some longs in my Discord in this segment here. Impulse is what you require. Impulse candles, impulse structure. That is what makes a good quality setup. Impulse, impulse, impulse. Right? When you look at any major pivot point, any major swing point, we have impulse. And you want impulse from higher time frame fair value gaps, ideally. You don't always get that, but you want impulse, right? That's a 15-minute fair value gap. We want impulse. Impulse is what we're looking for. All right, so when you zoom out, this is right now in the 1-minute chart, but you can see that any major swing point, we have impulse from those areas. So yes, Jake, you are correct, and it's an important point. Impulse is really, really, really important to our trade. I don't just take an inverse fair value gap if it doesn't have impulse or structure to it, because it's probably not going to be as good. That's just how it goes. So really, really important. Here we go. Yeah, these are really good points. This is back on this video here, guys. And this guy, Anton, if you're watching this, this is a really good statement here that you made. You know what I mean? trading it's a hard game, and one of these lessons, a few of these lessons have been about psychology, and a lot of people don't appreciate that. I could teach you the best strategy in the world. Like I could teach you what I do, and I do. Like on YouTube, or if you're in my premium Discord, I teach you guys, and I've got the models there. But at the end of the day, if you don't put in the work yourself, if you don't work on yourself, you won't succeed. You just won't succeed, because a poor psychology and a fear-based mindset is not overridden by good strategy. That's really important. That's really, really important. In terms of this, the checklist is in my Discord. So if you want to access that, feel free to do that. It's quite important, quite important, quite important. We've already changed time zones. Let's have a bit of a look. We'll do a few more questions. Yeah, this one here is a really good one. This one here. So Ian, if you're watching this, really good question. Let's get into it. My biggest struggle is that I've recently got into trading, been practicing my model for hours a day, fair enough, and he's gotten decent at it. A lot of people are here. Totally failed to realize how long it would actually take to hit a profit goal of 3K. Making $30 to $70 per trade. I guess I could go for the long haul, but I feel like I need to hone in on learning to switch or swing trade, right? And I left a little comment here. Go take a look at that. But ultimately, here's the key. Right? You need to be realistic, and I need to be realistic with your own circumstances. And let me elaborate on what I mean by that. When you're trading a prop firm, most prop firms, when you're funded, assume you're funded, you need to make anywhere from $100, $150, or $200 a day to be considered a winning day, right? For a winning day, you need to have that amount of money. So if you're only making $30 to $70 a day, it's not that it's not worth it. It's just that you need to work on building a risk tolerance. That's all it is. And that will take time. So if I could go back, I wouldn't go back straight to having an 100K account. I wouldn't do that. I wouldn't do that because I blew a lot of money doing that. But I'll just try to learn how to trade first, learn the strategy, and I'll do exactly that. I'd aim for $30, $70 a day, something that in my mind I'm comfortable with losing on a funded account, of course. So obviously the risk is less. And then increase your risk appetite. As long as you're making that base amount per day, then everything should be sweet. If you're making less per day or per trade, I should say, then you've got to take too many trades. So you could make $50 in a trade, and then you have to take 2 trades just to qualify for a winning day, and that will make you eligible for a payout. It's not worth it. So for me, typically the risk will vary. Everyone's different. Some risk 100, some risk 2, 3, 4, 5, 6, 7, 8, 9, and $1,000 per trade. It's really a personal choice. But I do think that's a big point. And we haven't talked too much about prop firms, so I want to talk about them now briefly. I have and personally have used in the past multiple prop firms, right? Top Step, Apex, My Finding Futures, Take Profit Trader. There's many prop firms. It doesn't matter what prop firm you're using. They are a money in, money out game. And you have to trade prop firms within your tolerance and within your means. Prop firms are a game. As long as you're pulling out more money than you're losing by putting in money to buy accounts, you are a profitable trader. Doesn't matter what anyone says, that is profitable trading. It's not the same as a personal account. Point number 1. Point number 2, it's going to take time to get to a level where you're going to get payouts. But at some point, you need to take a leap and you need to bridge that gap from I'm really comfortable to I need to step outside of my comfort zone. There's never going to be any growth in trading, in life, in any endeavor if you don't step outside of your comfort zone. If you do what's comfortable forever, you're going to get the same results. You need change to have change. Remember that. So everyone's different. Again, slow and steady. But then once you've got an edge, and this is what I do, once you've got an edge, then you can consider if it's within your means to up the risk a little bit on the eval and spend more time and less risk on a funded account going slow and steady towards a payout. Let's move on. Really good question, but really, really good question here. So really important. This one here. I understand the concepts, but more of managing trades. Do I hold to my draw on liquidity? Do I take profit at the first swing high? This one is a really good question, and we're going to end on this question here. It's a perfect one. This video is about 20 minutes long. Perfect. So let's talk about a few examples. Let's just assume for a second someone took a trade down here, right? Let's say you took, let's just say you took a long position here. Now, whenever you take a long or a short, it doesn't matter if it's a long or a short. There are many, many ways to take profits, to mitigate partials, to even think if you want to take a partial, if you're going to move your stop or whatnot. There's so many options. So what I'm going to start off by saying is you need to experiment with what I'm about to say and then make a judgment based on what your data says and based on how you feel, right? based on how you feel. If you don't feel comfortable with a certain thing, then don't do it. Now, the easiest way to do TPs is just to go for a fixed risk to reward. And most of the time, if you have structure like this, most of the time, if you're correct or somewhat correct, you'll be able to get a 1-to-1. When you start asking yourself, okay, can I get a 1-to-2, 1-to-1.5? You need to now have an understanding of market structure, which brings me to my second point. So number one, fixed risk to reward, 1-to-1, go from there. Number two, target swing highs or fair value gaps, or a combination of both. And it's a really good question because that there is a previous range, right? Now, some people I know, they'll enter here and they'll take it off at 0.5, which is fine. Other people hold until here, which is fine. Other people try to hold till here, which is fine. Other people just go for a 1-to-1, which is fine. So my main point here is that everything works, and I personally do all of the above. When I'm trading, I look at the market structure. If it's volatile, I'll hold. If it's pushing, I'll hold. If it's weird, I stick to my TP being a 1-to-1 or the next swing high that makes sense based on the range of the handles, and then I go from there. So hopefully that answers your question. It's a really, really good question. When do you go to break even? Yes, based on candle momentum. I think I just answered that. So if you enter here, price pushes up, chill out, pulls back, pushes up, go to break even. As it pushes below this low. If you want to hold, obviously at break even, you take a partial, pulls back, pushes up, move your stop to here. So you need to give it a little bit of wiggle room, but at the same time, you want to still preserve your downside. And so, many people do different things. That's what I do personally. Some people would go, look, when it gets to 1-to-1, I take a partial, go to break even. Then I hold to a 1-to-1.5. You can do that. The only downside to that is that your 1-to-1.5 may not line up with market structure. And maybe market structure would suggest that all you should require is a 1-to-1. Does it make sense? So there we go, guys. 20 minutes, question and answer. If you got something from this video, let me know below. And if you have questions, leave them down below. I'll do another one of these later in a couple of weeks' time. If you're not yet in the free Discord, join that. Hopefully you guys have had a great week, and we'll talk very soon. Peace out. All the best.